A terrible jobs number in August just sucks the life out of stocks. Dow down triple digits. Alan, on Wednesday you were saying that bad news could be good news because it might prompt the Fed to act. Do you still feel that way?
Well, it's funny. I think the Fed will act with some kind of QE3, maybe September 20th they'll announce it. But this news was so bad. I mean, zero. This is zero growth. We've only had that once before in 1945. So it was just so bad. It took the wind right out of even the QE3 proponents are saying, you know what, this is not good at all. So that's why you're seeing this market really sell off the way it did. Plus the fact that the banks are under attack. Banks are 20% of the S&P, and two of them, JP Morgan and Bank of America, big components of the Dow 30. Then follow that with American Express and Travelers, a lot of weight on this market.
When do you think we'll see bargain hunters come in and sort of support buyers and support stocks as they hope for a QE3?
Well, not today. Especially now, I think today a lot of guys have left for the long weekend. You saw some bounce off the 1170 and the S&Ps, which was expected. Programs are just hitting it back and forth. But it's a weird market, like you mentioned earlier. It really is times when even the buyers are saying, you know what? We had that break on the S&P 500 about a month ago when they broke that 200-day moving average. So now every time it rallies, they sell in instead of buying on dips. And I think you see a psychological change going on right now.
Will that change, though, next week, or do you think this will be the pattern?
I think the pattern's going to be volatility. Now, August just ended. Normally August, the quietest month of the year. We had 10,000-point swings, intraday swings in August. Incredible. We had 4 days with over 400-point swings. Incredible. So I think that's what's going to stay is this volatility. Because remember what really forced this volatility was events in Europe that haven't changed at all. Here in America, nothing's really substantially changed. So I think those things are going to stay with us, and as a fact, we'll have volatility.
And government and Fed not really going to do that much good. Are you seeing still some kind of rotation into utilities and dividends like you saw on Wednesday?
Very little today, but yeah, there is that little rotation going on. Again, big holiday week, 3-day week ahead of a 3-day weekend ahead of us. So a lot of guys have left, so they're not really taking big positions one way or another, except for selling early this morning on the jobs.
All right, and last quick question. So we'll see volatility continue then, but any hope from next Thursday when we hear President Obama speak? Do you think that'll buoy markets or help you feel better?
Whatever you care about this administration, the fact is President Obama, super intelligent man. Geithner, super intelligent. Bernanke, Princeton scholar. And my point is, if these guys haven't figured out by now how to create jobs, I don't think there is a silver bullet. So I think we're just going to hear more political talk for the next year's election. But any real change, it's going to be difficult.
All right, thanks, Alan. I really appreciate it. So banks and jobs leading markets lower. Expect more volatility.